Are you looking to go from podcasting to profiting? Podcast Media Machine is the #1 production team to help you achieve a return on your investment. They'll help you design, produce, and turn your podcast profitable. Visit podcastmediamachine.com and tell them Jill sent you. Welcome to V is for Victory, a podcast about how small businesses overcome big battles. I'm your host, Jill Miller of Vera Creative, a boutique marketing firm in the Chicagoland area where I'm also a part-time professor of an advertising course. Join me as I talk with entrepreneurs about the challenges they face as well as their strategies for success. Hey everybody, welcome. Today my special guest is Rob Stevens, founder of CFO Perspective. Before we jump into conversation with Rob, I just want to remind you, if you're getting anything of value from this podcast, please follow, download, like, subscribe, share, comment, leave a review. All of those are super meaningful and impactful and help out the show a ton. So without further ado, Rob, welcome to V is for Victory.
Thanks so much for having me. And I think you've picked a great topic that we all struggle with. So I think this is going to be great for your listeners.
Thanks. Yeah. So tell me a little bit about what led you, like your background and what led you to CFO Perspective, to founding that business, and what it is you do for your clients.
Sure. Most of my career has been as a CFO, director of operations of companies, and mainly in banking. But also as a CFO in healthcare. Also, I've worked for a few nonprofits. And during that time, I was the program manager for a group of investment advisors. I was on loan approval committees. I was the collections department at a $2 billion institution reported to me. So I saw a lot of the good, the bad, and the ugly in what was going on with small businesses. And to be quite honest, working inside as a CFO of a large business, it's not much prettier in large businesses either. But I wanted to work with those smaller businesses. My dad left a larger business and started his own business. And I wanted to work with companies like that, people who were experts in sales or production or service of some sort, and really knew their stuff, but didn't know how to build a business and the financial decisions involved and things like that. And so that's why I started CFO Perspective, was to help small business owners. And really it's expanded to the people who support them, the coaches, the consultants, the CPAs, to help lead these companies to profit, growth, and purpose. And I do that with guidance and with resources for them.
So this is really interesting. So when you say small business, what do you define that as? Do you have like a number of employees, a revenue?
Right. There really are some different types. When you say small business, I teach, I adjunct instruct at an MBA program, and I teach entrepreneurial finance and I teach behavioral finance. And that's funny, in the entrepreneurial world, you get into the same question. Well, what is an entrepreneur and what is a small business? So I think there's probably 3 levels I would break it into. One is the solopreneur, the person who's just starting out. And a lot of people stay at that level. And in fact, I may stay at that level. I work with a virtual assistant company. I work with freelancers, but I'm a solopreneur, and I may stay that for my business. And a lot of lifestyle businesses and a lot of people who create jobs and not businesses for themselves is a popular saying. That's not a bad choice. And so that's completely a decision a person makes for their, the purpose of a business is to serve the owner. And we'll talk about that later, but that also means serving other people. But that's a person's choice. And if that's the business they're building for themselves that fits them, then that's great.
That's next what level I always say I do, because I don't. I say I don't play well with others. I have an assistant, but that's about it, and that's about all I want. I don't want to grow any bigger. I like it, me, myself, and I.
Yeah, there's probably a second level there, and that's the small business owner who's not on a high growth track, but does work. Business is a team sport for that person, and
right.
so they work with others, and they and they build a business. It may just be 5, 10, it may be 30, maybe 100 employees. And so they're very much a small business. They don't have a lot of complexity. They're maybe it's privately held or family held, so it's very simple ownership structure and funding structure. So that's another type of small business, and certainly that's the type I work with. I've worked with all the three types that we're going to be talking about. Well, mainly these first two. The third is maybe your classic entrepreneur who's on a very high growth track, who's looking for venture capital, angel investors first, then venture capital, and then potentially the big cash out. That's a completely different animal. Their complexity from the very beginning has to be fairly high, and they take a very high growth track, some big risks, some big rewards. And that's a very different thing than the other two types of small businesses we talked about.
Do you find that those people come from a particular industry?
When we think of those people, the people we think of are Silicon Valley, the tech
Yeah.
industry, some of those things. We've seen it a lot in emerging technologies or emerging concepts, things like that. That's really where we see the opportunities. The other industries are much more mature, so it's hard to really find a niche to be a breakout growth company for that. So
Yeah.
that's usually where we see it.
Yeah, that's totally what came to my mind. Most of my clients also are in that solo entrepreneur or that, 5 to 50. I don't have anybody with 100 employees, I don't think. But yeah, so that's interesting. So great. Thank you for clarifying that, because I always just find it interesting because there's such an array of definitions that we could go for when we're talking about small businesses. So, all right, back to you.
Well, let's talk a bit. You mentioned earlier about a struggle we all have, and that is how do we price our products? And particularly in the current environment, there's some fear out there, some economic fear of the current economy, or maybe it may be specific to a person's business. And so we have to tackle both those. And so I thought what we'd start with was talk about just the basics of pricing. So also at the $2 billion institution I was at most recently, I was the chair of the pricing committee. So we dealt with this all the time of how to price products, how to build the product, communicate value, and then price the products. So I mentioned earlier, and this is really where, for me, everything starts, is the purpose of a company is to serve the owners. I mean, that's why the company exists, is a group of people decided to take this leap and to form a company to achieve their goals. And I immediately follow that up with the only way you're going to receive value is to give value. And usually the three big groups in this for business success is providing value to the owner, providing value to your customer, and providing value to your employees. And like we talked about with solopreneurs, it's mainly the dynamic between the employees, or between the owner and the customer. And then these smaller businesses and the entrepreneur and larger businesses, employees become a bigger and bigger factor into that equation. And so that's really where business success happens, is where there's value being exchanged between each of these three parties. And particularly when we're talking about customers and pricing, then it's communicating, are we creating, or are we providing value for the price that we're asking for our services or our product? And so a lot of that ends up being education of value to make the pricing reasonable. And we can get into more details of different ways of doing that. There's also, so like I said, I adjunct on entrepreneurial finance and behavioral finance. So the entrepreneurial side's like the CPA side of me, the CFO side of me, which is very analytical, that you could show all the numbers to show what a great deal you're offering. But at the end of the day, decisions are made with the heart, not the head. And so that's where behavioral finance kicks in, is it's always a perception of value. And so what is the perception of the person? And it may be based on the framing or the way it's described by me as the person selling or the owner, but it's also a conversation in their head and the stories they have and the way they think about money and the way they think about where they're at financially as a company, so that perception could be driven by fear or some other things.
Yeah. And it's interesting because a couple things that I run into a lot are, like I talked about before the show, is if somebody's handling their own marketing, it's hard for them to part from the money that it would be to pay me to do it because they've already been doing it. So they're like, why would I pay somebody to do something I'm already doing? Even if they know they're half-assing it, or they know it could be better, or they're being told that they need help. I think that's one of the bigger things is that everybody, or some people really like the marketing and they're not that good at it, but they like it. And so that's another thing is like it's a piece of the job that they like to do. So they don't want to give up that control. But just because, again, you like it doesn't mean you understand robustly as somebody who's been in the industry for 12 years with an advanced degree in helping businesses, blah, blah, blah. But, and then the other side of that I run into is like, you know, me and my customers get very close with our clients, right? So I'm very close with my clients. They're very close with their audience, and because of the size of their business. And so it's hard when you're being told like, oh, I can't afford you, or I'm going to be late with payment, but yet you see your customers spending money at a bar, or you see your customers spending money on a vacation, or like whatever that may be. And you get like, you can get, I have a client that is really super upfront with her employees, with her customers about when they're going to raise prices, right? And it's like, because she's so upfront about it, like she can get pushback from people, and
Mm-hmm.
it's like, okay, but your customers aren't there to tell you what to charge for your business, right? Like I always try to like reel that client in a little bit, and I'm like, there's some decisions that actually don't need to be discussed with your audience or even your employees. Like what you charge, yeah, if you trust that your employees are going to provide some sort of valuable insight that you've perhaps missed, then I think sharing, you know, your thoughts or your, you know, ideas or asking for their input is good. But at the end of the day, like you're the business owner, and that's a part of the business that doesn't really concern other people. And maybe I'm wrong, but that's just kind of the way because I've seen it play out negatively, that's my advice for that particular client.
Good. Yeah. Yeah. Lots of interesting things there. Let's start. I have like three areas I wanted to touch on what you mentioned. So let's start with towards the last part of the conversation about talking about price increases and also talking, how much do you share with employees? And I definitely believe in transparency and honesty all the time but there are times when it's entirely appropriate to not share certain things with employees. And so you just have to draw those lines, and those have to be respected. Now uh, on the pricing and price increases, it's interesting. There's a huge dynamic of what goes on when you raise prices, and it's not something you're going to hide from your customers. They're going to know there's a price increase, and that plays very much. Our sense of fairness is very, very important on how we perceive price. And when a price goes up, especially if it's been a price that's been around for a long time, and especially if it's free, if you used to give something for free and now you charge for it, that is actually almost a breach of contract, perceived as a breach of contract sometimes. And we actually process unfairness differently in our heads than we do just regular analytical decision making about a price. And so part of what we need to do with price increases is we have to explain why. And once we explain why, then that usually takes care of all that anger, fear, or whatever with the price increase.
So let me ask you this.
Mm-hmm.
I kind of feel like I kind of feel like society as a whole has a feelings over facts type of mentality right now. And I feel like when you said our sense of fairness, oh my gosh, that just a light bulb went on for me because so many employees don't understand the nuances of owning a business. They don't sit there and think about the electric bill and the gas bill and the, what it costs to keep the lights on, what certain programs cost, what, updating equipment costs, what, having, this space cleaned costs, like whatever it is, right? Like they don't see employee taxes. They don't see all the behind the scenes. And it's almost like the better the business owner manages their personal finance, the more animosity or sense of unfairness it can create, because the employee might look at the business owner as like, well, they've got plenty of money. They drive this nice car. They do XYZ. They, whatever. Their kid goes to this college, like whatever that may be. But at the same time, like, there's just so much that goes into place. So yes, like your sense of fairness, how you personally handle your finances is also going to play out into what other people are seeing. And like I said, there's just, I think, in the client that I have in my head, it's just people just don't understand the overhead costs, right, associated. And we are raising prices, and we've kind of battled back and forth about, well, like you said, how transparent are we? I don't particularly like blaming the economy, but to be quite honest, that's where we're at. I mean, the cost to do business has significantly increased, and that's just the bottom line. And this particular business owner is very good at pouring money back into the business, and actually does probably what you would advise most people not to do, pays themselves last versus first, in order to create a space that adheres to her morals and her values and what she's trying to achieve for the community as a whole. But yeah, that whole behavioral piece is so, so fascinating to me. Like, I can't even tell you, because our sense of fairness, like what's fair, and I think about what's fair. If I charge $1,000 a month, I'm still making $12,000 a year with a master's degree. Is that fair? Like, you know what I mean? Like so people think about how it's fair to them, but not if it's fair to the business owner, I feel like.
And that gets back to it. Business success is when we give and receive value from all three parties. And that's between the customer, that's between the owner, and between the employees. And so with, like you talked earlier, let's circle back to when you're talking about explaining the value of the services you provide as a marketing person. I work with a marketing coach. At the very beginning, it was just me doing everything, and it was pathetic. And so I knew I needed help. I kid that I don't throw down copy, I throw up copy. And so I know that's my area of weakness. And then there are also tasks that I knew weren't the best use of my time. And so that's why, and there were technical areas that I didn't know the website. And so that's where over time, I had to learn to reach out to these freelancers, reach out to the virtual assistant company, and reach out to a marketing coach to guide me through these things. And so those are the steps a business owner has to take. And we all have to realize we only have so much time. And yes, we only have so much money, but both are limited resources. And one of them, our time, is usually the thing that needs to be invested in the highest purpose that we have for it to produce the highest return. And so that's where we have to reach out and leverage our knowledge with the knowledge of others to build these larger companies. So when we talked earlier about solopreneurs, that's with the gig economy today, you're not making a choice between limiting a company to your knowledge and not limiting it to your knowledge. You're just choosing whether to hire employees or whether to hire contractors to leverage your strengths to the size of what used to be smaller companies that hired lots of employees. So that's the beauty today, is we don't have to make those trade-offs, that we can really get help from the people we need and grow our business. I like to say that everyone has three things they want. All three parties have three things they want: dreams, delights, and dollars. And Carmen Gallo, author of Talk Like TED, says, sell dreams, not products. And this gets into when we're talking with people, we really are trying to figure out what's their ultimate goal. And like you talked about the person who may pay themselves last instead of first. And so that's a choice they have to make. Now, I'm not going to say what's right or wrong because it's their business. And so if they decide I'm going to be paid last or I'm okay with accepting this because of my values or whatever, then my job as a finance person working with them is to say, okay, given that, and then talk to me about what you want out of your company, what you want your company to do. And you may find that the people have values that conflict a bit. They're conflicted. And so it's working with them to identify what are the priority, to be clear of what the values are, to be clear of what we have to decide between, and then to help work through, okay, how do we decide what the priorities are to achieve what you want to achieve? Just as long as we're making this choice consciously and not just letting it happen or just seeing how things play out and dealing with it at the end of what's left, that we're doing it with control and decision. And that's really an important part of this whole part.
Yeah, that's great. And I would put my client in that category. She's not just throwing stuff at the wall to see what sticks, I guess you could say. It is methodical there, and the mission is very clear. And she's very successful at accomplishing the mission. So there's that.
So let's talk about fear a little bit, because it is, we're in a tough environment. Like I said, every time when things change, it's a little bit of a renegotiation. And for a lot of us, the costs are going up. The costs of employees are going up. The costs of a lot of the services that we do go up. You talked about overhead. My whole career, I've been in accounting. I am overhead, right? So I totally know what that's like to be is that overhead that everyone hates and everyone feels like they're working to cover them.
Too. You're right. You're totally right. That is exactly what I am too.
Yeah.
I'm a burden.
Yes. So we're just parasites on the rainmakers who make all the money. And so we just, we have to accept that. I like to believe that it truly is a team sport and we all need each other. But sometimes, once again, it's the value perceived versus the value I really think is there, the reality. But so we are working against rising costs and economic uncertainty. And I know it's easy to say that it's uncertain times because it's always uncertain times. The future is always unknown. So we can't, that part's common, but the high inflation is a newer challenge that we haven't seen for 40 years. So, okay, we have to deal with that. And it does drive fear. And so the interesting thing about fear is studies have shown that a financial loss is twice as painful as a financial gain. That's called prospect theory. And so we may think, oh, I've shown that the benefits are greater than the costs. But when people look at losses, they weigh twice as much on us emotionally. And we never, ever make an entirely rational decision. Our decisions are always partly the analytical side and also influenced by our emotions and other things. And so that loss, the double weight of the loss does weigh heavily on the decision of the person. And so how do we handle that? So one way is when talking with a client or trying to figure out the situation, and maybe it's with you talking about a marketing budget with a potential client. Me, it'd be talking with a strategic plan or a business plan or something with someone. Is we say, okay, this is what we're talking about. This is the idea I'm pitching, or this is the plan we're thinking about doing. And a lot of times we like to sell the dream, sell the upside, but in the other person's mind, or sometimes the other person's bought the dream and I'm the person who has to come in with, well, what if things go wrong? And what's that look like? And it may be that's the story that's really going through a person's head when we're talking about the good stuff. And one way to do that, it was made famous by Gary Klein, it's called a pre-mortem. And it says, okay, let's say we're a year from now and what we planned was a complete disaster. What did that look like and why did it happen? And maybe that's a way to get to understand our fear, to understand our fears, to understand the fears of others. Or if we're overly optimistic, which if there's any poster child for over optimism, it's got to be entrepreneurs. It's got to be small business owners, in a tough, the odds are not in our favor, but we all believe that we are going to be the survivors.
Yeah.
So that's a way to go through it, is to say, and that's a way to really listen for what are these fears, because they'll play out in the postmortem, in the pre-mortem. Oh, okay, these are the things you're afraid may happen. All right, and to never discount that, because those are truly what's going on there, and talk about that. After we get through that, then there's another thing that we maybe after we may be completely convinced that the value for the price is there, but the other person just can't commit to that. Or maybe we feel like there's a strategy to take, but the person just can't commit to the full strategy. Then we need to kind of decide is, what can you commit on? What piece can you commit on? And this is something that's actually done quite a bit in personal financial planning. And it's done with people that have a hard time spending money or investing in riskier assets or higher yield assets when they should. I know a guy who was a wealth planner. He was working with a client. She had 35 million, very, very safely invested. And he said, we really need to, you really could make a lot more and grow what you have for whatever purpose you want for, if we move things a little bit. And she said, well, what if I get sick? And he's thinking, he said, you are sick. You have $35 million. And so, but it is
sick rich.
He's sick rich, but that is her fear. That's her reality, right? So that's where we start. You have to start there. And so one way you do that is through a bucketing system. And I like to say that budgets, well, one, I like to say budgets are a collection of guesses. But two, I like to say that budgets help spenders save and savers spend. And so it's just getting some clarity about the future to make some decisions and feel confident, rather than, well, I hope this works, I really don't know. And one way the planners do this is through what they call the bucketing system. And we are prone to doing something called mental accounting, is we think of things in different buckets. So for example, you put money in your checking account that you plan to spend right away. You put money in your 401k that you plan to use for retirement, and you never touch it. You never really even think about it that much. And then maybe somewhere in between is something you're saving for like a house down payment or a big thing. Those are mental buckets. We think of different money different ways. And so it's the same way with that may be carried over, but especially by solopreneurs whose businesses financial planning is very much like a personal financial planning. And it may be the same thing as, okay, you can't commit to this amount. What is the amount of cash you're willing to put at risk for a higher return potentially by making the investment in marketing services, by making the investment in whatever, an asset, an advertising campaign, hiring some other consultant to take over some of the business like we talked about that you're doing yourself, which isn't the highest yield for your purposes. And so to find that safe space and say, tell you what, we'll set aside this amount of cash, that's going to pay the bills. That money's safe, your company's safe, to give that sense of security. Then this set of cash is for us to invest for a higher yield in whatever that is. And that's where, and you just have to decide how big is that. And that's the part where they're willing to take those risks in the face of fear.
Yeah. So, but I think they have to come with a certain level of pre-organization.
Correct.
I know a lot of like the solo entrepreneurs are funding their business from a full-time job still, or some other side hustle, or with the help of a spouse or something like that. And so we're talking, even that is high level to say, I know very few people who financial plan for their business. Sadly.
Exactly. Right. So that's all right. So we're going to simplify that though. And that is, so when I talk with new business owners, usually in a loss position, right? They're running losses. And so the big question is, what's my runway? And so runway is, how many months do I need to fund this until it starts producing cash? And usually how I break down the business for someone is I say, okay, what do you have right now in fixed costs? If you sold nothing, and some businesses, have material costs. Some people hire contractors on a variable basis. And so as they sell things, they have variable costs that also they have to pay extra. And, but I start with, all right, let's just start with what do you need just to keep the lights on or keep your business open and doing its thing? What's that starting point? Okay. And then do you have that cash available to cash flow that until you think the business is going to run? Because that's really the big question is, can you even keep the doors open until you start getting cash? Then we start layering in, okay, let's say you start to grow grow income. How much do we need to start covering those costs by the cash flows of the business? When is that going to happen? And we start looking at where the revenue comes, so you don't have to see how long that runway is and those other things. And that's really kind of, then we start to say, okay, how are we going to get there? And we start to layer in, what investments do we have to make? When do we hire the next person? When do we, those are the big decisions. Usually you're working with the person to decide is, when have my revenues gotten to the point where it's safe to hire the next person? When is it safe to do these things? And we're always looking at, always making sure we have enough cash either in the company or the personal ability to get cash to get there. And also thinking of contingency plans too. Okay, if this doesn't work, where else are we going to get cash from? And that's, yes, absolutely. With small businesses, it's a bit of cash planning that they have to do. And it just always starts with, how long can I keep the doors open with the cash I got in my savings account?
Well, and if the last 3 years should have taught anybody, it's exactly that, to have a contingency plan. My client who owns a CrossFit box, like when she was forced to close down, she rented out equipment so people
Yeah,
could still do the workouts in their home. And and it paid the mortgage on the building so she could keep afloat. But it was like, that was kind of born out of necessity. But it really, that's a great point on something that, as business owners, if you didn't learn over the last 3 years, I'm sorry, but shame on you.
I did a talk to a group of small business owners on January of 2020. And I remember one of the owners asked me about how much savings they should have. And I said, 3 months of your business's expenses at a minimum, maybe 6. And even after I said that, I thought, man, that seems like so much, but that is kind of a standard out there that people talk about. And let's face it, once again, we're very overconfident by nature, especially business owners. And so we're thinking, put every money into the business, because anything we put in savings is money we can't put into the business to make it grow, So we're like all in. And I understand that, but the problem is if you hit any bumps in the road, if anything happens, then you're not around anymore. And so you do always have to balance a pool of cash for the long-term stability and safety of your company, and a pool of cash that you're putting out there at risk for higher returns. There's always those two pools you need to keep in place. And and then, like you said, a couple months later, the world shuts down in March of 2020. And suddenly that 3 months seemed really reasonable. And a lot of small businesses got away with it, in all honesty, because of government programs that kept them afloat, that offset that. And so some people may not have learned the lesson if they would have had to cash flow that themselves completely. But still, yes, that is you need to have, as a small business owner, those two bits of cash, those two pools of cash to keep you going.
And it also reminds me of another psychological piece that I think is that when one spouse goes into, leaves a full-time job, maybe, right, with a nice income, and goes the solo entrepreneur route, has that conversation really been had with the other spouse about the timing and the amount of money and the amount of work and just like the whole lifestyle change that it's going to bring about? Because it does, right? And I've seen people have to bounce back into their professional careers because it seems like there was not even enough planning done amongst the family, if that makes sense.
Absolutely. Yeah. The same company I did the talk for right before COVID, I did one during COVID called Couples with Companies. And regardless of whether Well, that's the first thing that has to be negotiated. I have my company. My wife's a teacher. I like to say she's not just my wife; she's my health insurance. And so, yeah,
Yep.
that is a source of strength. Because I have my own company. She has access to a lot of benefits, a lot of stability there. Once again, a source of stability with a source of risk put at play. Absolutely. So one of the things I've noticed too, one person starts a business and the other person has a job or whatever else that they do, and one of the first questions is this our business as a couple, or is this my business? And that's not just an ownership question, that's also who gets to make decisions, who gets to provide advice about the business. So I had a student in my MBA program, in my entrepreneurial finance class. His wife had a small business, and so he's the MBA, right? And she's got her little business. And of course, he knows all of these great ideas to help her with. And of course, it's her business. And so she has her own ideas of how she wants to run her company and her own values. And so he's saying these things and she's like, no, I really value, certain things about how I run this company or how I make my product or how I sell it. And that was a source of tension in their marriage. So yes, those things have to be negotiated. And in Couples with Companies, we also talked about that we all have stories of how we think about money and how we spend money. And so when two people in a partnership of any sort, that they have different styles, and even two partners that aren't married in a business have to compromise in their styles. And this gets back to some owners are going to want to put a lot of money into the business and not need a lot of cash out of it. Other people, the reason they started the business was so when it cash flowed, they could pull a ton of cash out of it and live off that cash and live a big life off that cash, or keep the money in the company, but get a lot of perks within the company from all that cash. Well, the other owner says, no, I'm plowing it for growth for the future. And those are some things that have to be worked out. But yeah, within married couples too, there's dynamics.
Such dynamics.
Yeah.
Okay, I didn't mean to get you off track there, but these things pop into my head.
The other thing I was going to talk about was one of the struggles we have is we have values. All of us have values of our time, and how do we measure that? And of course, as a CFO, I can sit down with you and you can measure anything. There's a book that you can measure anything, and so I could help you analyze that. I help do all sorts of analysis on I was the marketing buddy I was the budget buddy for marketing. I mean, I've had to work with marketing and decisions on marketing and marketing return on investments, things like that. But there's a lot of things where we're having to make decisions where something's very much dollars, and the other side, and we're comparing it against something that's harder to measure and harder to value. And it is, when we talk about prices, this happens all the time. And so when they can't easily assess the value for the money, then they just look at price, and it just becomes a price game. And the problem is when it becomes a price game, then lowest price wins. And usually that's potentially the lowest quality. And it may not be what you ever wanted, but it was just so much easier to compare prices against each other than value for the price I'm getting. And that gets back to explaining the value and walking that across to the price and for the person.
Yeah. I recently joined a Facebook group. I don't know. It's like, I can't remember the name of it, but I'm going to have to add you to it because this is what they talk about all day long. And it's your jam, let me tell you. But which is funny because it was some time ago I had somebody on my podcast and she said, I believe that every job is a sales job. And I've always been the person that is, I hate sales. I hate sales. But at the end of the day, what am I selling? I'm selling marketing services, right? I am in sales as well. But yeah, that is something that I read about in the group really truly a lot. And you're spot on with that. You never want it to come down to just the pricing game, like you were talking about, because it's the lowest price that's going to win. So yeah, fully agree with that.
Yeah, I I teach about pricing strategies, and I talk about, okay, you change your price and you think you're going to sell more by lowering your price. Well, your competitor is going to do the same thing potentially. And then you've both reduced your prices and you're selling the same amount of product. You're in a pricing war at that point, and no one wins in a pricing war. So a way some people deal with how people compare prices is comparing price amongst options, and you don't want to present a lot of options to a buyer, because when a person's presented with a lot of options, they flood emotionally. It's overwhelming. And ironically, the more options you give to someone, the more of an emotional decision they'll make, because they have trouble analyzing all the options.
Isn't it called choice anxiety?
Yeah,
And
yeah,
like you give people too many
exactly.
choices and then they don't
Mhm.
decide or they don't do anything at all because they're so overwhelmed.
Yeah, they've done studies where they did it with jams at a grocery store, with little jars of jam, and they found that when they put a few, I forget what the numbers were, but let's say 5 or 7 jars of jam versus 24 jars of jam, people would buy more when there were only 5 to 7, because 24 was just overwhelming. I mean, what do you do? And so 5 to 7. So a common thing is the three options. And the reason is people are drawn to the middle option. So often it's a high value product, or a high price, high value product, a low price and not as much service, low delivery cost product. And then there's something in between. And usually that something in between for you is your product, is your sweet spot. And that high product, you may do, but it's really there. They call it a decoy option. It's really there to sell the second highest price product, because people, they don't like to reach for that high one. Some will. Some people always want the best. And great. And so I'm not saying you're faking that product. That is really something you're willing to sell, but you want to put a premium price on it, because it's usually something that's going to cost you a lot to deliver and a ton of value. And so you want to deliver on that and maintain your brand promise. But it's that middle choice. It's really where most people are going to be going towards. And where, in a sense, you're kind of funneling them to, just because of the way people deal with choices. And so that's a common way, is through the three options of when presenting options to people. It's the classic good, better, best.
Yeah, no, I love that. And I guess, yeah, and I guess I've always just tried to be like, for me, my personal approach to marketing, and I know we got to wrap up here, but my personal approach to marketing, the methodology, I guess you could say, that I was taught in grad school was an integrated approach. And so when people started coming to me and they're like, well, I just want my social media, it's like, handled. And it's like, that goes against everything I was ever taught, because I know that I'm not just going to build their brand on social media. Yeah, it's going to be a part of it. But if they're going to pay me a little bit of money just to do their social media, pretty much that money is wasted, because I can add value in so many other places and really create a robust marketing plan for them by utilizing on and offline spaces, right? And multiple different strategies and multiple different tactics, not just doing one thing. And people are always like, well, can I see your list of prices? And it's like, I don't have a list of prices, because I haven't put a price on just social media or just email marketing. Because then it's like, okay, great, we sent out the email, let's get more views. What do I got to do? Well, now I got to share it to social media. Well, now I'm doing two things. You know what I mean? So, and very early on in my business, I tried to like pick and choose and have people like strategize, but I always got screwed, because I always ended up doing more, because I knew that more was needed, right? And so that then I went to this like flat rate per month, right? And that's kind of still even where I'm at, unless I have that initial intake call with a client and I hear, okay, we could go in this route or this route. So then I might present them two different options. But really, it comes down to, at this point, after 12 years, I just have to tailor it to the client, right? Each
Right.
proposal is very unique and very different. I did want to circle back on one thing very quick. And like I said, I know we need to wrap it up, but what would you advise businesses? How much stock should they put in their competitors' pricing? Should they pay a lot of attention to it, a little bit of attention to it? Should they let that instill some fear in them in their pricing strategy? Like, what would you say to that?
That's an excellent question, partly because you have to be aware of the competitor's pricing because your customers are. And so you can't hide from it. You can't pretend it doesn't exist, because once again, you have to think of what's the story going on in your client's head? What's the story going on in your customer's head? There's a thing called anchoring. And particularly if they heard the other person's price first, they're going to think that's the price for what the service is, and that starts it. And what happens with that is, and anchoring can happen in all sorts of crazy ways. They've done studies where people roll dice and it influences the prices people pay. They do, and they did one with realtors where they gave different pretend off list prices by the other realtor, and that's where the appraiser or realtor was heavily influenced by whatever list price supposedly was placed by that person realtor. So that's real. It impacts the market. It does do things. Once again, from there, you have to, if it's completely crazy, you have to break that number somehow. You have to get that person away from that number, and you have to get them pointed to some other number. And one way is to show the differentiation. I mean, the only way we can separate ourselves amongst all these other businesses is differentiation. So you have to explain price, and that's more of an analytical price for value thing. The other thing would be to say is somehow get some other number in their head to say, really, this is the number that we should be starting from. This is the, but it's going to take a lot of work to get that second number in their head as a starting point, and then adjusting from that second number there too. But you have to break that focus on whatever that other number is they have in their head. Do you have to look at, those competitor prices? You have to do it, but you have to really be able to tell your story. And really there, once again, tell it as a story. I talked about the analytical side, but really have a story of your business, have a story of what working with you is going to be different and why your prices may be different. And it's funny. There's stories of locksmiths. And they would do when they were new, they would unlock locks, and they'd struggle, and people would have no problem paying them after an hour of struggle to get into their house. Then they got good, and they could do the lock in like 10 minutes and still charge the same amount to the customer. And the customer thought that was completely unfair. And it only took you 10 minutes. And it's like,
right.
No, it took me years to learn how to do that.
Right.
And so it's the
or
same
like a
thing
mechanic. They have the same thing. They charge you by what the book says how long it should take, but not how long it actually takes them.
Yeah. So that's another way too of a price for value. Ironically, you're actually not showing your cost. You're showing the value to the client and showing them of what was the value of receiving this, and that's another way to break price and value is to show the value to the person and to say, what's the most likely product that's going to get you to that value you want, not what's the lowest price you can pay. That's never what we want. We always want, right. We want the dream. We want what our goal, what we're striving for.
I love this. Well, I actually have a prospecting call coming up here next week, and I've got so many notes and so much goodness that I've taken away from this conversation. I can't wait because I'm going to go at it a little differently, because a lot of the reason why this person was referred to me in the first place was because they kind of they don't really even realize that what they've paid for isn't even good. Right. And so that's like a kind of a hurdle. And it's like, I don't want to be the bearer of bad news or look like just a Debbie Downer, or like I'm just coming in and ripping on, what they have. But at the same time, what they have does not reflect what they paid whatsoever. And, they kind of think, well, it's okay, and I'm thinking, wow, I would never put anything out there like that looked like that with my name on it, and especially not charge that price. So there's some really good, just like you were talking about, perceived value, education of value, all the things I'm super excited to bring to this prospecting meeting. I know you've helped me a lot in this conversation. Hopefully our listeners are taking notes as well. I think that you have really shed some interesting light on, like you said, pricing strategy, sales, fear. Yeah. So thank you for your time. I appreciate it. Why don't you tell our listeners how they can connect with you, where they can follow you, reach you?
Sure. The best place is on my website, cfoperspective.com. It's all one word, cfoperspective.com, no spaces or anything like that. If you go to cfoperspective.com, you can click on a free tools. I have lots of free resources for people. Really, my site has a ton of information. I'm probably one of those people that overshares. And so there's lots of great things that you can do, or cfoperspective.com/tools. And that'll take you straight to the page with lots of free resources. But there's really resources all through the site that you can tap into to make better decisions to improve your company and profits and purpose.
Great. And I'll link that in the episode notes. All right, Mr. Rob, anything else you think that the audience or the world, whoever's listening, what do they need to hear? Even if it's not strategy, finance related, what do people need to hear in this day and age?
Well, we've talked a lot about dreams and fear. And so it's just listening for those. And the best business advice I ever got was a boss of mine one time told me it's always about relationships. And so that's really what it is we're just, in the end of the day, we're just serving each other and helping each other. And we do put a price as part of that exchange of value. But at the end of the day, we just have to remember it's a relationship and we're helping each other out.
I love that. Thank you. Thank you so much for your time today.
Thanks.
Thank you for listening to my mom's podcast.